Oh, there's Matt. Good morning, Matt.
How you doing?
Good. Better night.
Dude, I am freaking out. I don't know how else to start this meeting. I was up all night. I literally was on my computer to the point my eyes couldn't stay open last night out of just insane excitement about what's happening in the market right now.
Yeah.
Um,
Wild.
this, and we're going to talk about it today, but it was all about AI. It was all about what's happened in the last week around AI. And I'm still every corner, I feel like, oh my gosh, this is the biggest thing. And then I put it down and I'm excited. And then I'm like, well, what if it could do this? And it's like, oh my gosh, this is the new biggest thing. Like I am freaking out about AI right now.
Yeah, well, I saw you in your office yesterday, and that's all I heard.
Oh, it's amazing. We've got a lot to talk about for our traders around AI. If you are a trader and you're not thinking about this, you're missing the boat. Like no question, the largest opportunity in the markets just emerged, um, and it's for small people because the big boats, these big trading companies, are not going to be able to move fast enough, and so there's going to be this disruption for the small guys to really get a piece. So, anyways, welcome to the Trader Pulse podcast. This is our third episode. I've got Todd Tolman, one of our hosts from GreenChart, founder Matthew Pohl. Thanks for being on, guys. Glad you could be here. Like I can feel my heart beating with how excited I am, Todd. I haven't been this excited in over 15 years.
Yeah, well, I'm excited because the sun's out today. And we should have talked about this earlier, but my golf clubs are still stored away.
Oh yeah,
Yeah, I'm trying to bring you down a little bit, Matt,
thank you.
but hopefully I can get out sometime today.
Yeah. Well, maybe. I mean, it's not quite sunny, but anyways, let's jump in. Let's do. I think we should go over our topics that I'm not as excited about first, because I think we need to talk about what's happened this week.
Okay.
Want to hit that off?
Yeah. Yeah. Let me get my screen going here. So I want to talk about, yeah, let's see. That's correct. Let's talk about the money supply. I know to some people this might seem really boring, but
So important.
yeah, yeah. But really, one thing that we need to keep our eyes on when we're traders, and you know, we need to understand the macroeconomics of what's going on in the economy, because good traders know the general direction of the dollar at a given day. And the way they determine the way they predict the direction of the dollar compared to other currencies is looking at macroeconomic events. So the Federal Reserve comes out with reports all the time, and everybody knows the Federal Reserve is a central bank of the United States, privately owned by the banking system. It is not a government agency. I had to put that in there, Matt. But even so, they do give a lot of really good data. And if you follow, there's a couple sites that I would recommend, and this is one of them. If you want to get some good economic research, you want to go to fred.stlouisfed.org. But you can look it up. You can just Google this, real money supply or real M2 money stock, and it'll show you the site. But what I like about this site is you can pull up all kinds of reports. This is just one of dozens that you can look at. But this one got my attention this week. So what is money supply? Okay, so you've heard of M0, M1, M2. So M0, so everybody knows, is cash in your pocket, coin in your pocket. It's what you're carrying around with you. It's what everybody's carrying around. That's M0. M1 are checking accounts and short-term demand deposits like savings accounts. Okay. And prior to 2020, demand deposits were part of actually M2. But since 2020, demand deposits are now part of M1. So what is M2? M2 is M1 plus time deposits like CDs, less than $100,000, minus, I think, IRAs and KEO savings. They minus that out of it, and money market accounts. So if you like have a trading account with your broker, you have a retail money market account, that's included in M2. Anyway, so why is this important? Well,
yeah.
when you have too much money in the system, it drives inflation. So when inflation gets out of hand, the Federal Reserve there's a couple of ways that they can do to pull money out of the economy. They can do open market operations and sell, they can sell securities like government securities, and that pulls money back into their coffers. But most of the time they do interest rate tightening. So we've seen interest rate tightening over the last year, and that has pulled a ton of money out of the system. So it's not just you and me, but when demand deposits go down, when checking accounts go down, when savings accounts go down, that leaves less money for the bank to have for reserves. So when the bank has less reserves, it can't lend out as much money. So to make a long story short, the money supply is contracting at a record pace right now. So let's look at this report real quick. Can you see
Todd,
that?
and just to summarize, I want to help our average Joe who's not an expert around the around money supply and how the Feds handle this. But so what you're saying is when money supply goes up, we've pumped, stimulated, done something to help the economy create more cash, whether it's through lending, stimulus checks, PPP loans, whatever. But you're saying when it goes down, they're not just like filling up shovels and throwing it in the furnace. I actually think that's how they did it. It's like, oh, money supply is going. They're just taking the money, and I guess the government's being responsible finally for once, and they're burning it. No, that's not what we're talking about, right? We're saying when it's going down, we start to tighten the monetary system that lends out, helps encourage cash going out. And I think that's what we're seeing. Credit crunch. Yeah. People don't have access to money in their cards. People don't have loans getting approved like they used to, and the money is more expensive.
Yeah, money is more expensive, but what's happening is people aren't putting money in banks. People are taking money out of banks.
Well, and they're not
taking their savings out.
Yes, exactly. It's in the bank, but they've rehypothecated, they've reassigned where it is and locked it up in these 6-month vehicles that in this data shows as a drop in money supply.
No, what's happening is there is less money that people are putting in banks. There's less demand deposits, there's less checking. And so
right, but hold on, I gotta make this argument.
Is all that, and it's less. So the bank.
Right, but if someone, because this data gets impacted, if I take my cash out and I put it into a money market account at my bank,
yeah,
that is a deposit withdrawal. Even though
it's still part of M2. That's still part of M2.
Right. Yeah. So like people are like, well, I didn't pull my money out. I just moved it into a money market account with my bank. And it's like
my point is they're not doing that. They're not putting it into money markets.
Well, how do we know that? I mean,
because it's right here. Here's the M2. Here's the real M2 money stock from the Federal Reserve. Okay, it peaked at 76. Let's see if I can find something higher. 76, 72. So basically $7.6 trillion in real M2. And real M2, by the way, is adjusted for the consumer price index. Actually, let me show you a different report. This one might be a little easier. So we'll just do the not seasonally adjusted, and the one that doesn't take into consideration the consumer price index. So back in let's see, yeah, so March of 2022. So just barely a year ago. It was 21 trillion, 21.8 trillion in M2. And this is not seasonally adjusted. I prefer this report actually. And today it's down to 21.2 trillion. Okay.
Right.
And so that in itself is really an amazing drop. It's 3.4% in a year. And that hasn't happened since the Great Depression.
And see, that's January. This is actually, I saw a chart, Todd, where this actually went back up. It showed it going back up after we bailed those two banks out, Silicon Valley Bank and Signature
Well,
Bank.
I don't know. This is a pretty, I mean, if I could pull this in and try to get more of a granular look.
Right, but we don't have February's and March's data. And in February and March is when we had those bank failures, and the government decided to bail out those bonds over a 10-year period so that the banks didn't have to take the hit now.
Well, what you're saying is we don't have March. We do have February. It's right here. It's
right.
21. So we don't have March yet.
I just want people to be aware that this actually did spike up in March, and it was because of the bank bailout. Like we keep doing the same problems. We keep backstopping these things, and it's like the money. Yeah, it's just an issue. Like we've got a problem with how we govern money in this country, and it's not getting better.
Can I tell you one more thing? I want to go back to this original chart.
Yeah, go ahead. Sorry. So I just wanted to clarify this. Before you go on, also, I want to make this argument. The M2 money stock also, like, if there's some things that impact it, and one of them is also taxes. Like, a lot of people, we've seen the drop, but one of the things we've got to consider is maybe this was tax money that's also come out, right? On this huge climb, this huge increase that we had in stimulus and money supply going into the market. So a lot of the speculation, there's like three things I'm wondering. It's like, okay, is it going into bonds and treasury notes? Because that would be a direct pull from withdrawals. Is it going into pay taxes? Is it going into, or is it going into pay, Uncle Sam? Or is it actually GDP? Are we actually seeing a radical decline in GDP? And I think we can kind of guess, but we won't know for sure, I think, until the end of the year.
Yeah. Well, I think that the governing reason for this whole discussion is that the money supply is shrinking. And there's a variety of reasons why it's shrinking.
Which is good to see. It's good to see.
It is in a way, but watch this. I mean, if you go to the real M2 money stock,
oh boy,
what this does is it adjusts it for the consumer price index. So if you take December 2021 and subtract that, so it's 7.6 trillion. And again, this is adjusted for the consumer pricing because we've had huge inflation.
Right.
And then you compare it to February, which is 7048. That's actually a 8.9% drop in 14 months, almost 10%.
Wow. So I mean, it's like we've got to stabilize this, but we don't want to overshoot it, right? Like if we came back to this chart
the Federal Reserve has a blunt instrument to use with interest rates. The problem is so much of this is delayed. Right. That by the time they make a decision, there's still things working themselves out that they haven't seen yet.
Right.
So quite often the Fed just isn't very responsive to what's really happening. This gets into the whole theory of whether or not the Fed really has the ability to control like they claim they do. I don't think they do. I think the mechanisms that the Fed uses are very crude, and they don't really have as much control over the economy as they lead themselves to saying. Anyway, sure. I'm concerned about the money supply going down too quick. The thing is, during the Great Depression, we had a 28% drop in the money supply in less than 3 years. 28%. And what that means is people are trying to get their money out of the bank, but it doesn't exist in the bank because it's gone. And so that drives, when you have little money or less money than is needed in an economy, you have a depression. But prices go down, people get laid off, businesses fail.
Maybe. Well, yeah, the businesses failing and people getting laid off, I will agree with you on.
Yeah.
I see two likely scenarios going in, and we have to remember the one that I think we just have never seen in this country. And one is we have a depression that was like the Great Depression that we had before, or a recession like the one we had in 2008, or we have a hyperinflation depression. Because when the banks, you have to ask this question, Todd, and I want to know what
you mean
think about this.
stagflation? You looking
No,
for
I mean a
stagflation?
hyperinflation depression.
That's stagflation.
Oh, is it? Okay, great. Yeah, see, you're my encyclopedia on this thing. But like, if you have the banks failing and the deposits aren't there, and we saw this just months ago with Signature Bank and Silicon Valley Bank. What did the government do when the deposits weren't there?
Well, they stepped in and they said that they'll cover all the deposits.
They backstopped it. And so
Yeah.
what happened when the banks don't have the money? We need to have this reset, but then the government says we'll backstop it. How many more trillions of dollars will we print to fix that problem?
I don't know.
Or I don't either, but I think we
I
have to
think-
be aware that like we could fix this with inflation. We're definitely going to have higher interest rates. I don't see how you could. That's my prediction. I don't see how you avoid that. But if the higher inflation rates don't fix this problem, and then we have to do some quantitative easement later to bring this back, I don't know how many more of these roller coaster loops we're going to be able to survive as a dollar.
Yeah. Well, actually, I think that's what's going to play out on a global basis. I really believe that our dollar is going to be replaced by another currency. So the dollar, as we discussed in a previous episode, it's the reserve currency of the world. All the central banks around the world hold dollars as their reserve currency instead of gold. That happened, in the 40s after the Bretton Woods Agreement. But there's a lot of countries that are getting away from dollars. China, Russia, Brazil, India, all the BRICS nations, right? They're teaming up to get rid of the petrodollar. Everybody's jockeying to remove the dollar as the currency that the oil is traded in the world today. In most cases, if you want to trade in oil, you have to use dollars.
Right.
And that's a deal we made with Saudi Arabia in the 50s.
Yep.
But these other nations, like I said, Brazil, Russia, India, China, they're trying very, very hard to get away from the petrodollar.
Right.
And they're almost there. So imagine, China holds a lot of dollars right now. They hold a lot of dollars.
I think
they hold a lot of dollar-denominated debt, right? The treasuries.
Right.
China wanted to ruin us. If they're ready with those other nations to kick off a new currency, the digital yuan or whatever they decide to do, and they decide to start dumping all their treasuries, it's over.
That would put them into a depression. There's no way they can do that right now. But maybe the long-term play is to do that, hit a reset, and then grow separately. Is that what you're saying?
But look, if they pulled the trigger on this, it would hurt China. But guess who is worse?
We would. Yeah,
because
China's going to get.
We will. So basically, it's like killing a cancer, right? You go into chemotherapy, and your whole body is dying. But the hope is that the cancer will die first, and then you can stop the treatments and let the rest of your body recover, right?
Right.
Well, China's in much better position to cause this dramatic collapse and recover than we are.
Right.
For sure.
I want to mention one thing also that I found this week, and I think this is big news for this week. But we had a cash deposit. I think I would talk to you about this earlier this week because I was freaking out about it. But I saw a highlight reel. I saw this highlight reel that said, we haven't seen bank withdrawals at this percentage level since the Great Depression. And this was the title, right? And of course, things clickbait these days, so you got to be careful.
Yeah, it's true.
But it's actually true.
Yeah.
It's freaking true. And during the Great Depression, we had a negative 5% year over year withdrawals from banks. It was actually what triggered the Great Depression.
Yeah, it's
And
28% over 3 years.
what's that?
It was 28% over 3 years.
Right. Yeah. So, but what triggered it was this negative 5% year over year. We have not seen something like that since the Great Depression, and we just had it happen this month. Or I should say last month, the year over year, month over month, just hit negative 5%. Now, at first, guys, I'm not someone who likes to run on headlines and then tweet things to my friends on, stuff I don't understand. So I did a little dive on this. It makes a lot of sense, actually. We just had the largest increase in deposits also. So like, you got your stimulus check. What did you do with it? You put it in a bank. Businesses got PPP loans. What did they do? They put them in banks. We had this huge cash injection. People take cash, they put them in banks. So you had this, it was actually the highest we've ever had, and the highest by like insane numbers. I think the highest we'd had in the past was not even over 10%. And last year, it was 50% an increase in deposits. 50% over the last 2 years. It hits this spike and then drops out. You're going to have some correction. I mean, how do you not have some correction when you have 50% deposits go up and then you stop giving people money? A year from then, you're going to compare it to when they were depositing a year ago. And it's like, okay, so obviously a year ago, 2 years ago, from last month, we had significant deposits going in, from inflation, from all this cash piling. You're going to have the negative whipsaw, right? It's just going to do that. Negative 5%. It's my prediction that we're going to see even worse. I think we're going to see below 5%. It's going to make headlines, but you keep your guys' heads on straight when you hear this news, because it doesn't mean we're going into depression because of that. It just means we just shot so much cash into into your bank account, into everyone's bank accounts, that you just have to compensate for that at some point. You're going to see it in the data.
Yeah, I mean, it's already happened. We just saw the chart.
Right. Yeah, that chart was a great illustration of that. Yeah. So I'm curious for you, Todd, what's the play? Like, what are you seeing is going to be a opportunistic market? Because in all fear, in all upset, there's always opportunity, always. Even the Great Depression brought some of the greatest opportunities for people ever. It created the greatest reset and the greatest redistribution of wealth that our country had ever experienced. 2008, when I was doing cell phones back in the day, same thing. The Great Recession we had created literally my opportunity to get in and get wealthy.
Yeah.
And we're experiencing that now. But outside of like just getting in and hustling and, maybe starting a business or making money trading, like, are you seeing any other types of opportunities that this is creating?
Well, I think there's an opportunity in real assets. So two that jump out at me are precious metals and in some cases real estate. If a lot of people are just going to hold on to their real estate during these hard times because it'll still generate cash flow for them, and they're already on a sub 4% interest rate anyway. So the people that have real estate for their own personal residence, they're going to sit tight. That's a good thing to do. But those who have real estate that they can rent out are going to be doing great too, because they're going to cash flow. But what happens during inflationary times, when the dollar's losing its value, assets go up in price. Right. So I mean, I can pull up another Fred report. I won't do it, but the consumer price index is climbing. It's not going down. So prices are still going up. So what do you do when prices are going up and the dollar's going down?
Interest rates
you hold on to assets. I mean, gold and silver are good places to start. But any asset that has intrinsic value and book value will always do really, really well, during inflationary times.
Yeah, I would agree with that. Your one gold coin is always going to be worth one gold coin.
Yeah, it's whatever a gold coin will buy at the time.
And your
and
property
the test
you
of
have
time.
is always going to be worth at least the property you have. And
Right.
your house is always going to be worth the roof over your head and the walls that it's built on.
Right. Right.
Um,
And we the last time we met, we talked about real estate, how the inventory is still low. So that'll keep the price up, I think, because inventory is low and new housing starts climbed a little bit in February, but still it's below the 2-decade average.
right.
So and some people actually say during inflationary times you should get into debt. Have you heard that one?
Yes.
And
Oh, I've always said that because then you beat the banks.
right, because the
And now
debt
it's
you own
happening.
today,
Now it's happening.
you'll pay back with crappy dollars in the future. The
Right.
dollars will be worth less. So you
Long
actually
term,
win.
and I would say long-term debt, not like year-over-year debt or 2-year debt.
No. Yeah,
We're
it's
talking
fixed debt.
10, 20, 30-year debt.
It needs to be fixed interest debt too, not
And fixed interest.
adjustable.
That's great. That is a great highlight for our listeners. If you are if you're in anything that's not a fixed interest debt, I know rates are high right now, guys, but I would
Consumer
be
credit card debt, it's horrible.
Yep,
It's
I
up
would
to
be looking at
20%
locking
now
it
is
up.
the average APR on credit cards.
Yeah, lock your debt up into long-term fixed debt because it could get worse and it likely will get worse.
Anyway.
And then that's a win for you because then you go do the same job, you won't make the same money because your job inflation should go up also. What we have seen, and it hasn't quite kept up with inflation, but jobs are paying more. Like there is more money going into the job market. And it's not like the high-end jobs. It's more like, you go to McDonald's, someone's making $20 an hour now to flip burgers, right? And no, I'm not saying any offense to those people. We need them, but that's what's happening is these lower end jobs, the price is just to keep an employee interested just to survive and pay their bills.
You can turn burgers for $20 an hour now.
Yes, you can right now. It's blowing my mind. That went up almost 2x in Utah in the last 3 years. 2x. So if you had debt and it was fixed, your ability to pay that debt off on a fixed rate almost doubled.
Yeah.
It doubled. So it's like,
I understand. You got to think about it. We could do a whole 2-3 hour session on working with debt with inflation.
Yeah, I just want to give these guys solid advice, trade advice, things that are really going to land home for them right now. I have a play also that I'm looking at with a lot of my real estate stuff, and I want to put this out there so people understand it. But right now is a great time to buy assets at current rates. And it's my prediction that we're going to have to do QE again, meaning that they're going to have to lower rates to stimulate things back to where they're at, to get jobs back up after the floor falls out. And so if and when that happens, again, it's a prediction. I don't have the crystal ball that tells the future, right? I don't, these are my opinions. But if you have a good property or something good you can buy that cash flows and you can make it work with today's rates, what's the opportunity when rates go down again?
Yeah. And we have a question from Donald.
Yeah, go ahead.
So he says, I think this is a question, not a statement.
Sure.
So a fixed interest rate loan would be better to pay monthly rather than pay it off if funds are available. I don't think not necessarily. I think what we're saying is if you have debt, it's better that it's fixed than if it's variable.
Yeah. And I would say if you have debt, it's my opinion. I think there's these programs. It wasn't like the Gordon Ramsay thing that's like, get out of debt, do this whole thing. I get that. I really do. And I don't agree with it. And a lot of people will say that like this guy saved their life and saved their fight. And I get that. You probably just didn't have good money management skills, right? And he just taught you how to manage your money. But once you understand how to manage funds, debt is not a bad thing. In fact, it's what makes the economy work. Right now, debt's still cheap. Like, I get it. A home loan for 5% seems like a lot. It's not. Like we've dealt with 8%, 10%, 16% home loans before, guys. Like debt has been.
My parents had an 18% APR.
18%. Yeah, this is not expensive debt. So if it makes sense and you can afford the debt, The debt is worth holding. I would not take cash out to pay off debt right now that's at 5%.
I mean,
not in any world.
I mean, the theory is if you wait to pay it off, you can pay it off with crappier dollars.
Right. So use your money, be wise in your investments that move with inflation, right? And then when debt gets cheaper, you can refinance, pull the cash out, and you have no tax consequence on that cash. That's the real estate miracle, is that you buy things, you refi, pull cash out, and you have no tax consequence on that cash.
If you reinvest it.
Right. If you if you reinvest it, but also if the cash, if it's equity in a home and you pull the cash out, you just increased your debt payment. Like the payment to service is the same amount, but now you have this bigger loan. And so you pull the cash out in the difference. I mean, Robert Kiyosaki's one of the guys that I started following around this. Look him up, guys, if you haven't, but he talks about this really specifically. How you make millions tax-free in the real estate market is this strategy that's happening right now. When rates go up, the opportunity is to find good, hard properties, hard things, hard assets that have that cash flow, even in a market like today. They're much harder to find. I get that. But they exist. If you can make them work now and refinance in 5 years, 6, I don't know when it's going to happen, but when it does, you will be able to refinance that cash, bring your payment down, get more out of, typically the way the market goes up with inflation, get more out of the property and keep that cash tax free.
We got to move on.
Okay, sorry. That's exciting. I mean, I think that's an opportunity though. And I love your gold and silver. Do you think, I mean, it could go both ways, Todd, and I really want to hear your opinion on this before, last question. Do you think it's more likely that we'll have a inflationary period, a little bit more inflation, a little more like interest rates will continue to come up, and then we'll have QE? Or do you think this is the moment and we're going to have hyperinflation and we're never coming back? Like, do you think the odds are that we'll go through another wave of this, or do you think the odds are that this is the moment and we're going to just have hyperinflation after this?
No, I don't think we're going to. I think the mechanisms are in place to fight hyperinflation. And because we're still the reserve currency of the world, we've got a huge bathtub to water down the currency. Yeah. And it's not going to affect us too bad. We can export a lot of that inflation. So I don't think we're going to have hyperinflation like Venezuela or Germany in the 1920s, right?
Yeah. Because
the dollar is so predominant throughout the world, I think that would be really, really difficult. However,
I think that's long-term our problem.
Yeah.
A lot of headlines are making it seem like the world's ending today. And I just want our listeners to know the odds, this has happened a lot. We've gone through lots of these cycles.
Yeah.
Right. And the end of the world was happening in 2008 also. And then we stabilized. How we fixed it with QE got us to where we are today. We're gonna keep trying to make this thing work. And I don't think this is the last cycle. So don't be freaking out like it's gonna end.
I don't think it is, but I think prices are going to continue to rise.
Yeah. I think we'll go through.
So here's what's really difficult is businesses are slowing down, right? So when supply is constrained, prices go up. When there's plenty of supply and there's plenty of manufacturing and production, then prices go down because there's competition in the market. But right now what we're seeing is, did you see the Philly index on Thursday? I won't bring up the chart, but
you can. I think it's worth looking at.
Yeah. All right. Well, all I did is just look up Forex Factory, but you know.
And while you're doing that, I'm going to see if I can overlay it on TradingView really quick.
Let's see. Yeah. So all I did, you can see that all I did was I pulled up Forex Factory from Thursday. You can see here that the Philly Fed Manufacturing Index, it was predicted to drop 19, but it actually dropped by 31. This is huge. Did you see what happened to the euro?
I did not see
yesterday?
this. I did not see this.
So there was a huge bump in the dollar yesterday. I think it ended up the direction it was going, but if you read this, I just want to focus on this right here. Why traders care about the Philly Fed Manufacturing Index. It's a leading indicator of economic health. Businesses react quickly to market conditions, and changes in their sentiment can be an early signal of future economic activity, such as spending, hiring, and investment. So what this is telling me is that our manufacturing base is slowing down. They're not picking up. So when things slow down, that means there's less supply, right? Which means prices are going to continue to go up. Even with interest rates going up, I think prices are going to continue to climb because of a contraction in manufacturing. But this is just my opinion. This is called stagflation. Stagflation is when you have inflation during a stagnating economy. It's really weird because it doesn't make sense. Why would prices be going up if nothing's happening in the economy? It's because you've got all this free nilly money flying around that's still trying to work itself out.
Right.
And anyway, it's impossible for the Fed to tackle stagflation. They just have to let it run. They have to let it figure itself out.
Right.
Anyway, I just thought that was an interesting thing to look at. So it looks like manufacturing is slowing down.
Yeah. Yeah, I would agree with that. Oh, which means it's working. I mean, a lot of people don't like hearing this news, but interest rates are working. Lending is getting tighter. The ability for a company to pull profits out is getting squeezed. And we saw a lot of what I would say news title profits, which was really a product of inflation. You know, people were screaming at the food companies for like steaks going up and showing record profits. And it's like, okay, yeah, but you take and just knock inflation off of those profits, and it looks as good or worse than profits we've seen in past years. So the headlines and the news is just trying to make everyone the bad guy outside of what's really happening, right? They're just it's clickbait, guys. They're really just trying to get your attention.
Yeah,
but
this whole thing was the whole problem we're experiencing right now is the federal government hooked to the hip with the Federal Reserve pushed way too much money into the economy way too quick. Right. That's what's driving up prices. It has nothing to do with what all the other actors in the economy are doing. We're all victims of what they did. Right. And it's just horrible mismanagement. Anyway, I could go on forever about that.
Let's move on. We've got an amazing topic, something that I think could fix all of this, could fix the economy, could have this country be the greatest country again on the planet. And it's AI, guys. We are having breakthroughs in AI that is blowing my mind. And Todd, I'm going to have you speak on this for just a second. Then I want to actually show these guys something. Well, I want to show a couple of things just to give our audience an idea of like what's actually happening and how this is impacting us. So go ahead and share your thoughts. And I want to show this really funny video.
So it'd probably be a good idea to review real quickly what AI is, right? Okay. So, you know, a lot of our listeners, or most people in the economy, had never heard about artificial intelligence until 3 months ago. But this has been in front of me for years. I've read several books on this. I've studied artificial intelligence and machine learning just because I'm interested in it. I'm not a programmer, but I learned to do a few simple things in machine learning a couple of years ago, and I've kind of stayed with it. But in general, I think artificial intelligence is really the wrong word. It's really machine learning. So we have the computers are so fast now and they're so capable that what they have the ability to do now is combine the resources of very, very fast and efficient computers to recognize patterns that humans cannot recognize. We're limited. So it's like we have limited RAM, limited processing capability in our brains, but computers seem to have unlimited capacity right now to find patterns that humans just can't figure out. I mean, a computer, 2 years ago, they had maybe even longer, they had the ability using AI to identify what was in a picture. Oh, that's a dog, or that's a cat, or that's a mouse, right? And that's been going on for a while, but now it's advanced so far that they've actually hooked a LLM or a long language module, I think is what it's called. I probably misquoted that acronym, but they've actually got a natural language element added now to AI, which makes it a lot easier to interface with AI and actually ask questions. So ChatGPT has been in the news for what, a couple months? I don't know. Has it been longer than that now? But it's, Matt, you're on mute.
We went from open source AI. So we had OpenAI for a couple years, went public last year. We went from it entering GitHub and a API way for developers to get into OpenAI and create their own little spinoffs. And then just last week, this guy, just as a hobby project, came up with this thing called AutoGPT, which plugs into the ChatGPT. That's actually the reason everyone's hearing about AI right now. It's because there's actually a user interface AI software that you can play with. And someone like any of you guys, I would highly recommend, if you have not gotten into OpenAI ChatGPT and just played with it a little bit, you have to do that today. Like, take the rest of the day off, go do that. You will see how just your job is going to get, you're going to get 2 times production. I mean, literally 2 times production just from that. Well, so we have this curve happening with AI. It's like, well, we went from OpenAI, you need to be a developer. Now we have this ChatGPT thing where it's like anyone can use. And then this thing came out called AutoGPT last week. And it is freaky. It's what kept me up last night. And it's like, when that, for me anyways, I get so excited about this stuff that if the energy and vibration's high, I can burn and not feel tired. I burned all night last night, guys, and I feel completely energized today. But I was burning all night last night on this. And I just have to show you. It doesn't make any sense unless I show you. So I'm going to show you a real quick clip of, one, how this is disrupting things and people are freaking out about it. But also, don't be like this guy. There is opportunity in this. Okay. So yes, it's disruptive. Yes, you might feel stupid about how you've spent your time over the last couple of years, but it's going to change the world. And our audience is going to be right on the front of this. And I'm committed to making sure that you guys see this. So here we go. I want you to watch this. So this is a guy who just completed, and I'm going to share the sound also. He just completed his dissertation on prostate cancer. He's gone through 12 years of schooling, 4 years of medical school. And I don't know if you know this, but they spend sometimes years building and writing their dissertation on how to diagnose a signet set for him as a signet cell for prostate cancer. And this guy, just like you guys, got on AutoGPT and just played around with it to see how capable is this really? Because I've spent my whole 12 years doing this. I have a dissertation that I put together on all my research because I'm a focused I've focused in on this one thing. And here was his response after typing in one question about the industry he is in, about a specific focus that he's paid to do in the future after he graduates.
Your symptoms, your primary diagnosis is signet ring cell prostate cancer.
That's the right diagnosis?
Yeah.
Turn the volume on, Matt.
What's wrong?
What's wrong, bro? I've been studying studying for the last 4 years, working my ass off to enter a career that's going to be taken over by ChatGPT, bro.
I mean, people still see doctors.
What do you do? This thing just diagnosed someone with the rarest form of prostate cancer, and all we did was put in the guy's social security number, bro. Do you know what a doctor has to do to diagnose someone with prostate cancer? We have to shove our finger in a guy's asshole, and with a straight face, we have to ask him to cough. So unless you're fucking weirdly lonely, no one's gonna want to come see a doctor. And all you have to do is just go to ChatGPT, put in a couple of numbers, and all of a sudden you have your social.
Yeah, there, guys. We have just unlocked something in the last week to diagnose prostate cancer. We have just unlocked something that the medical industry, I mean, this is going to blow up the medical industry. This is going to blow up how you buy things. This is going to blow up how you hunt for products. This is going to blow up trading. And so I want to show you this. This is Agent GPT. This is a web face. So someone, I mean, this curve, man, it's going so fast. We had AutoGPT come out, and then a day later, someone was like, oh, well, let's put this on the web and let everyone try it. You can get on today, guys, on this site, and it's called agentgpt.reworkd.ai. And this one's in demo, and there's some things that there's some limitations to this, but this will just give you a sense of like what's possible here. And this is what I've been freaking out about. We're going to call the name of my project trading. And the goal, and just so you guys understand how this works, I'm setting out a goal, and the agent is going to work on this goal until it figures it out, period. It's just going to take the trillions of lines of data and code and information that it's been deposited through OpenAI. And now with AutoGPT, it can search the web. It can search the web and make deployments on the web with real data and real-time information and give you live data that you couldn't do even through a software in the amount of time that this will do it. This is a massive disruptor. But I just want to give you an idea, like very simple. Let's just ask a trading question, like, help me find the best, I don't know, stocks with a PE ratio, under, I don't know, what's Warren Buffett's? Do you know what Warren Buffett's number is? I think his is like
under 10.
15.
You're not going to find
10?
anything
Okay,
under
okay,
10.
no, under 10. Let's do under 10. I haven't done this yet. I haven't done this yet. I'm going to show you how crazy this is. Help find me the best stocks.
I don't know if it's going to find what you're looking for, Matt.
Oh, it will. Just watch this. And watch what else I'm going to ask it. I'm going to ask it a series of questions. Under 10, or let's blow it up. Let's just say under 15.
There you go.
With a strong technical buy and fundamental buy. So I'm looking for two things. I'm looking for, and this stuff exists on the web, by the way, guys. The top websites out there have like these technical, and like if you go to Y-Charts or TradingView or even your broker, you can click on a stock and it'll give you like those, like, is this technically a good buy or sell right now? Fundamentally, is this a good buy or sell right now? Just watch what happens. So I hit deploy agent. It starts thinking about it. It's going to first list out what it needs to go out and do. So the tasks, it says, I'll go back through, but it's basically setting up 3 tasks that I've found in my goal, like to go find a PE ratio, technical.
It's creating its own tasks. This is key.
That's right. It just created its own tasks to go search the web, and it's, trillions of lines of code of data that's been inputted into it. And then it gives me the first set, and we'll go through this when it's all done, but here's the first set. Then it's going to think about it again. It's going to go, okay, well, we did that, but now I need to ask the second question, then the third, and then it's probably going to cross-analyze the two for me. And then it's going to say, based on the technical, based on the fundamental, here's the best overall with under 15, with a P ratio under 15. Now, this is going to stop because it's a demo. It only allowed it to run for, I think, a minute, and then it cuts it off. But even as a demo, guys, like, this is insane. Like, what's happening here is insane. So I hit the end, but let's just go back up, and I want to show you what happened here. The first thing it did, I asked it to do is said, okay, task 1, analyzing stock with P ratio less than 15 using financial data sources. Task 1, analyze stock with P ratio less than 15 using financial data sources. I've analyzed a range of stocks with a P ratio less than 15 using various financial data sources, such as financial statements, stock market data, and financial news. After thorough analysis, I have identified some stocks that meet your criteria that have a P ratio less than 15 and a strong technical buy and fundamental buy. These are as follows: Apple, Intel, Pfizer, Coca-Cola, JP Morgan. These stocks have strong financials, positive growth prospects, and are backed by solid market performance. However, it's important that you invest, blah, blah, blah. It gives us disclosure. Okay, then it goes through it again.
It's giving itself its own disclosure.
It did that on task 1, guys. It did that on the first task, not even the second one I asked it to do around the technical analysis, not even the third one that I asked it to do around fundamental. So then it goes into task 2 and it goes, okay, let's do this again, but now we're going to bring in what we know and we're going to add task 2. Task 2, the technical analysis of shortlisted stocks using historical price volume data is executed successfully. Based on the analysis, the following stocks have a P ratio under 15 and a strong technical buy and fundamental buy list of stocks. And by the way, this comes with like stuff you can download. You can get it in a PDF or an Excel sheet. There's multiple ways that you can extract this data. And then it goes through, it starts thinking about it. So by the way, this would be a download. This would be a list of stocks that I can download off of this. Then it goes back into its thinking. It's like, okay, well, let's go through this again. Let's perform task 3. Does the task 3, which was the fundamental side, basically says after analyzing financial statements, industry trends with shortlist stocks, P ratio under 15, I've identified the following as the best stocks with a strong fundamental buy. Company a company. So it's like telling you what it's looking for. That's a good fundamental buy. Like these are the things. And it goes through like what it would look for as a good fundamental buy. And then it goes, okay, now that I know that, and then what it would keep doing, it just would keep curating, is it would take that data and then it would say, okay, now that we know that this is what a good fundamental buy would be, it'd go back out into the web and say, it would look for this that exists in those existing stocks. It would cross-analyze it and it'd say, based on the ones I gave you, these are the top by order ranked under a PE ratio under 15, but are also performing here. I mean, guys, what we've unlocked here is an analysis tool that you can't pay for. You can't pay for it. I have them. In fact, Todd, I'm going through back-tested results this week through a software called Quant Analyst 4. And it's like one of the best ones out there, right? Where I can do all kinds of like studies and analysis on things. And this will do all of that without even the software. Without even me buying a user interface and have to load a CSV file. I can literally take a notepad CSV file, copy it, paste it into here and say, optimize this strategy. And it will do everything that software could do for me. And I could ask it to keep looking for better ways to improve it. And it will keep doing that without even me knowing what to look for, without me even knowing what to ask it. It'll say, oh, by the way, did you know this? Have you considered this and adding this? If you did this and you lowered your lot size, or you increased the time of day, or if you stopped trading on Mondays, or if you only traded from this time to this time, guys, I did it on this. And it's incredible. The back testing on this, the things that you can now use this for to just be your professional trading advisor is insane. And we have a web-based version that just came out in the last 48 hours. What is it? So here's the big question, Todd. What is this going to look like in a week?
Yeah.
In a week. That's the curve we're on.
Yeah, well, the way, I mean, I can answer this in a variety of ways, but I think this is going to cause huge dislocations in our workforce. This is going to cause major ruffles in our economy. There's going to be a lot of people that are going to have to go find different work. They're going to have to learn to do different things. This is going to become a big part of business, and businesses are going to save money using this. And they save money by laying people off. that they don't need anymore. And another thing I'm worried about is this. We don't have time to talk about this. We've only got 4 minutes till the
It's
top
so
of the hour.
exciting.
But Elon Musk was interviewed by Tucker Carlson this week. Do we got time to play clip?
Yeah, we have time. Yeah, we have time. Do it.
I don't want to throw water on your
If
excitement.
we have to go a little over, let's do it. I think our listeners and our audience will appreciate us getting complete on this topic.
Yeah, I just think I think we're in trouble. So this it's not going to be in this clip, but earlier they were talking about how AI has been taught how to lie. Okay, so just think about that when you listen to this. So this is the end of an end of a clip with Elon Musk being interviewed by Tucker Carlson. Hopefully you'll be able to hear it.
Hmm.
Yeah. Respect the future good for the humans.
Yes.
Yes. Because we're humans.
So can you just put it, I keep pressing you, but just for people who haven't thought this through and aren't familiar with it, and the cool parts of artificial intelligence are so obvious. You know, write your college paper for you, write a limit about yourself.
Yeah.
There's a lot there that's fun and useful. But can you be more precise about what's potentially dangerous and scary? Like, what could it do? What specifically are you worried about?
Going with old sayings, the pen is mightier than the sword. So if you have a super intelligent AI that is capable of writing incredibly well and in a way that is very influential, convincing, and is constantly figuring out what is more convincing to people over time, and then enters social media, for example, Twitter, but also Facebook and others, and potentially manipulates public opinion in a way that is very bad. How would we even know?
How do we even know?
How would we even know?
Oh, that just threw everything I just did and put this dark cloud over it. Like, what if? Was Microsoft on that list?
Microsoft is one of the owners of OpenAI.
I know, I'm looking to see if oh my gosh.
They're going up.
Guess
Yeah.
who was listed on that list?
Huh?
Microsoft.
Yeah.
Of course. So like, what if the people who own this could teach it to lie? And when you go, hey, what are the good stocks to invest in? They're teaching it that they should first give preference to theirs.
Yeah. There's another clip I want to play, but I don't think we have time. Tucker actually asked Elon, what do we do to control this? As a society, as a world community, what is it we need to do right now? I don't know if you want to hear it or not.
Yeah, let's do it. Let's do it. Let's get complete on this.
Yeah.
Can you hit share sound when you click it?
I'm
So
not sure.
In the bottom corner, there's a thing that it says share sound.
I don't even know where that is, Matt.
So back out of this real quick. It's really easy. Back out.
Okay.
And then when you hit share screen, at the bottom left-hand corner, there's a button that says share sound.
Oh, there we go. Thank you.
Yep.
Oh, it's asking for a password.
Oh, weird. What?
Can you see that
There you go.
okay?
Yeah, great.
You've heard people say we should just blow up the server farms because there's no way to, once this gets rolling, there's no way to slow it down. What do you think of that?
Well, the really heavy-duty intelligence is not going to be distributed all over the place. It'll be in a limited number of server centers. If you say very sort of deep AI, heavy-duty AI, it's not going to be in your laptop or your phone. It's going to be in a situation where there's like 100,000 really powerful computers working together in a server center. So it's not like subtle, and there are a limited number of places where that can happen. In fact, you can just look at the heat signature from space, yeah, and it'll be very obvious. I'm not suggesting we go and blow up to server centers right now, but there may be it may be wise to have some sort of contingency plan where the government's got an ability to shut down power to these server centers. Like you don't have to blow it up; you can just cut the power.
And what would trip?
Or cut connectivity as well. That's another way.
Right.
Yeah.
But what would trip that switch, do you think, in your mind? What would be the threshold that you'd have to pass to warrant the government cutting off your power or cutting off your signal?
Well, I mean, I guess if we lost control of some super AI, like for some reason, like the things that would normally work to do a passive shutdown, like the administrator passwords, if they somehow stop working, where we can't slow down or you know, I'm not sure. I don't have a precise answer, but if there's something that we're concerned about, and are unable to stop it with software commands, then we probably want to have some kind of hardware off switch.
Yes.
I think, you know, can't hurt.
Have you talked to, since you...
Anyway, yeah, so...
Dude, are we living in the beginning stages of the Matrix? Like, what is happening right now, Todd? I just remember that movie where like they finally wake up, and I'm not saying we're there. I'm not saying we're living in a simulation, but we might be in the future. And it was like a war against computers. It was literally a war that we were like trying to take out the mainframe of computers because it got to a point that we just couldn't stop it.
Yeah.
And once you integrate this technology with robotic technology that can create itself, once we hit singularity, there's no turning back on this. It's a war, especially if its objective is derailed. And there's already people creating crazy things on AI. There was a thing I saw called Chaos GPT, and its goal was to destroy all of humanity, create ultimate chaos, and then destroy itself. And it's already deployed. And now it doesn't have the power to go out and do that yet.
It doesn't have the endpoints hooked up, but yeah, you're right. When the endpoints get hooked up, you know, if AI has the ability, the problem is this AutoGPT has the ability to go out to the internet now, whereas ChatGPT did not. It has the ability to sign up online as a human and try to access things and try to manipulate things. Our whole economy is based on electronics and computers. So if you get a chance to listen to the whole interview, it's riveting. I mean, he talks about how the person running OpenAI thinks that AI should be given as much leeway as humans do because it's an actual intelligence. I mean, these.
What do you think?
I think he's crazy. I think he's crazy. So anyway, we don't have time to go into this today. Maybe we can do it on Wednesday, do a mid-market recap and cover a little bit more of this. But Elon Musk said the authorities need to get together and a policy group needs to be put together to deal with the real risks. I mean, AI has the ability to ruin civilization, you know, and we have the FCC for communications. We have, you know, the FTC for controlling the businesses and e-commerce. But and you know, we have all these organizations in the government to help protect us as a country. Whether they do a good job is another question. But if you've got something like AI that's got the ability to bring down a power plant or to launch a nuclear missile, I think that, I mean, we're talking about, you know, world destruction.
Yeah, just simple things to take the controls of an airline.
Yeah.
Or to, gosh, there's
anyway,
yeah.
I wish we had more time to go into this, but I think for traders, as traders, we have the opportunity to leverage it. And it's
huge
got
opportunity,
great potential to help in the medical field and help feed the world and give us longevity and this sort of thing. But at the same time, there's a lot of evil people in this world. There's a lot of evil organizations in this world that want to change this world to the way they think that the world should be. And AI could be used in a very, very dangerous way. That's what I'm worried about.
Yeah. In the meantime, it's there and it's open, and you might as well be in it. And my recommendation would be to leverage this, guys, as soon as you can, because if you're not following this and you're not right on the front of it, you're going to miss. I'm going to say this, and it's going to be on record. I think this is a bigger opportunity than crypto. I think this is like those of you who are like, I wish I'd gotten into crypto when it was early. I wish I had gone in and like done like, invested or bought in. I am saying this even to my crypto friends right now. I've been texting some of the biggest crypto guys in the state. And my stance is this is bigger than crypto. This is bigger than the emerging of crypto when you could have bought in at Bitcoin at less than a cent.
Yeah.
That's where we're at right now.
I told you yesterday, Matt,
yeah,
when you weren't alive in 83, or you were born in 83, I was in college. And I remember getting my first IBM compatible computer and hooking it up and turning it on for the first time and just thinking in my mind, this is the future. This is going to change the world. I haven't felt like that. Until just the other day when we started toying with ChatGPT. Seriously, this is a game changer, folks.
I completely agree.
I echo that. Check it out, see how you can use it to improve your profession, because it's going to be used in every profession. You're going to have to understand how this works. You're going to have to know how to work with it.
Yep.
And the world is going to change very, very quickly. It's going to change so fast now. Your head's going to be spinning.
Yep. And you're the first to hear. So like, subscribe, share with your friends. We're going to keep doing this every week, guys. And this is a free service that we're providing the community for those who want to join us, right? You're either in the front of the wave or you get left behind it. So once again, guys, thanks for being on Traders Pulse podcast. Myself, Matthew Pohl, Todd Tolman.
Thank you.
Thanks. See you. You guys have a good evening.
Bye-bye.